The market is in chaos. Nvidia just lost $500 billion in value, AI stocks are crashing, and Bitcoin is fighting to stay above key levels. What's going on? The answer might surprise you. DeepSeek AI, a Chinese artificial intelligence model, is shaking up the tech world and is having a ripple effect across crypto and stock markets. Could this be the start of an AI bubble burst, or is this just a market shakeout before a massive recovery? Altcoins are bleeding, the Nasdaq is sliding, and panic is setting in. But history tells us that these moments of extreme fear often create the best buying opportunities. The question is, who will capitalize on it and who will get wiped out? Well, welcome to the Chain Point channel. In this video, we'll break down everything you need to know: why DeepSeek is dominating, why AI stocks are collapsing, and how Bitcoin could be setting up for an explosive comeback. If you're in the crypto market, you can't afford to miss this. Stick around, smash that like button, and let's break it all down. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not investment advice. Always invest wisely. Let's get started. DeepSeek has emerged as a game changer in the artificial intelligence landscape, shaking up both tech and crypto markets. Developed in China, this AI model is not only open source, but also incredibly cost efficient, sparking excitement and concern in equal measure. Investors are scrambling to understand its implications, especially as it rivals industry leaders like OpenAI's ChatGPT. Could this be the beginning of a new AI revolution, or are we witnessing the early signs of a speculative bubble? The answer lies in how markets react to this disruptive force. The shockwaves from DeepSeek's rise have already impacted cryptocurrency prices, sending Bitcoin and altcoins into a period of heightened volatility. As investors reallocate funds toward AI-related assets, traditional crypto holdings are experiencing sell-offs. This sudden shift in capital raises questions about whether AI-driven investments are the new frontier or just another speculative frenzy. If history has taught us anything, it's that when hype surpasses fundamentals, markets tend to correct violently. Is DeepSeek fueling a legitimate technological breakthrough, or is it another overhyped trend? One major concern is whether DeepSeek's rapid adoption signals the formation of an AI bubble similar to the dot-com era. Nvidia, a leading AI chip manufacturer, saw a staggering $500 billion wiped off its market cap in a single day, reinforcing fears of overvaluation. If AI stocks continue to correct, we could see broader market downturns that extend beyond tech and into crypto. Bitcoin's historical role as a hedge against financial instability may come into play if traditional markets spiral. Geopolitically, DeepSeek's dominance highlights the ongoing AI arms race between China and the United States. With tensions already high, the emergence of a powerful Chinese AI system could push Western policymakers to rethink their technological strategies. This dynamic may also influence investor sentiment, as fears of government intervention or regulation could increase market uncertainty. For crypto enthusiasts, this raises another critical question. Will AI advancements support decentralization, or will they lead to increased surveillance and control? The connection between AI stocks and crypto markets suggests that investors must stay vigilant. Keeping a strategic perspective will be crucial in navigating this rapidly changing landscape. And speaking of market chaos, let's dive into how the crypto market is responding to these massive shifts. Panic has gripped the crypto market as altcoins face a brutal sell-off, leaving investors scrambling for answers. While Bitcoin remains relatively stable, the broader market is experiencing sharp declines, with some altcoins losing double-digit percentages overnight. This mass liquidation is largely driven by fear and uncertainty surrounding DeepSeek's disruptive entry into the AI space. As capital shifts toward AI stocks, liquidity is drying up in crypto, triggering a wave of forced selling. But is this just another shakeout before a major recovery? Market sentiment has taken a nosedive, with social media filled with apocalyptic predictions of an extended bear market. The Crypto Fear and Greed Index, which gauges investor sentiment, has plunged into extreme fear territory, signaling heightened anxiety. Historically, such extreme fear has often preceded strong recoveries, but the current climate remains fragile. On top of that, the recent tech stock sell-off, including Nvidia's record-breaking drop, has only intensified concerns. Are we witnessing the early stages of a broader financial downturn? Bitcoin's dominance has started to rise again as investors flee from riskier altcoins into more stable assets. This pattern isn't new. During market crashes, Bitcoin often absorbs liquidity from smaller crypto assets, reinforcing its position as the market leader. However, if AI continues to siphon capital from crypto, even Bitcoin might struggle to maintain its ground. The next key question is whether this is a temporary correction or the beginning of a prolonged downtrend. Another factor fueling the sell-off is the uncertainty surrounding interest rates and macroeconomic conditions. If inflationary pressures return, central banks may be forced to tighten monetary policies, further dampening speculative investments. This would affect not just crypto, but also AI stocks, which have recently seen an influx of speculative capital. The interconnected nature of financial markets means that any shock to one sector can ripple across others. Could this correction be setting the stage for a rotation back into crypto once the dust settles? Despite the panic, smart money is already looking for opportunities amid the chaos. Veteran investors understand that extreme fear often creates the best buying opportunities. If historical patterns hold, this sell-off might be the final shakeout before a major recovery. But before we get too optimistic, let's examine whether Bitcoin's technical indicators are flashing signs of a potential comeback. While the crypto market faces turbulence, Bitcoin is showing signs of resilience that could hint at a major comeback. Historically, BTC has survived countless market crashes only to emerge stronger than ever. Technical indicators are now suggesting a potential breakout, with key support levels holding firm despite the widespread panic. One of the most crucial indicators is Bitcoin's ability to stay above its long-term trend line, which has acted as a launchpad for past bull runs. Analysts point to strong accumulation at lower levels, meaning large investors might be buying the dip. At the same time, Bitcoin's volatility is increasing, which often precedes major price movements. With the Nasdaq and AI stocks facing corrections, some investors may look to Bitcoin as a hedge. Another bullish sign is the decreasing exchange supply of Bitcoin, indicating that long-term holders are unwilling to sell at current prices. Historically, when Bitcoin supply on exchanges shrinks, price tends to rise due to reduced selling pressure. Meanwhile, major on-chain metrics suggest that BTC is entering a phase similar to previous pre-bull runs. If history repeats itself, Bitcoin could be gearing up for a significant upward move, possibly dragging altcoins along with it. But what resistance levels need to be broken first? Bitcoin is currently testing a key resistance zone that could determine its next major move. If BTC breaks through this level with strong volume, it could confirm the beginning of a new uptrend. However, failure to do so might result in further consolidation or even another leg down. Given the recent volatility in AI and tech markets, external factors could also play a role in Bitcoin's trajectory. As we watch Bitcoin's price action unfold, one thing is clear: the battle between bulls and bears is heating up. Whether BTC takes off or experiences another rejection, its ability to reclaim key levels will shape the market's direction. And speaking of battles, let's explore the growing rivalry between DeepSeek and ChatGPT and why it matters for the future of AI dominance. So, a new AI war is unfolding, and at the center of it are two major players: OpenAI's ChatGPT and China's DeepSeek. While ChatGPT has dominated the AI space since its launch, DeepSeek's rapid rise is shaking up the industry. Unlike OpenAI's model, which operates under a closed-source framework, DeepSeek is fully open source and completely free. This strategic difference has fueled a surge in downloads, leaving many wondering, is ChatGPT losing its dominance? And what does this mean for the future of AI development? DeepSeek's success is largely driven by its accessibility and cost-effectiveness. While OpenAI's GPT-4 reportedly required over $100 million to develop, DeepSeek's R1 model was built with just $6 million. This massive cost disparity raises serious questions about the efficiency of AI development in the West versus China. Could DeepSeek's ability to do more with less force OpenAI and others to rethink their business models? If so, this could mark a turning point in AI accessibility and innovation. Another critical factor is DeepSeek's ability to outperform ChatGPT in certain areas. Reports suggest that DeepSeek's model handles reasoning, coding, and math problems more efficiently than GPT-4, This advantage has already led to increased adoption, particularly among developers and businesses looking for cost-effective AI solutions. However, OpenAI is not standing still. Rumors of a GPT-5 release are already circulating. NVIDIA, the undisputed leader in AI chips, just suffered a shocking 17% drop in a single day, erasing over $500 billion from its market cap. This staggering loss is bigger than the entire value of some of the world's largest companies, raising serious concerns about the sustainability of the AI boom. Just weeks ago, NVIDIA was riding high on AI euphoria, but now investors are asking, is this the first sign of an AI bubble bursting? Or is it just a temporary correction before another rally? The drop wasn't entirely unexpected. NVIDIA's stock had been on an unprecedented rally driven by massive demand for AI chips. However, analysts had been warning that valuations were becoming unsustainable. With DeepSeek proving that AI models can be developed at a fraction of the cost, the market is re-evaluating whether NVIDIA and other AI giants are overpriced. If AI computing becomes cheaper, does that mean NVIDIA's dominance is at risk? Adding to the chaos, NVIDIA's decline triggered a chain reaction across the tech sector. Other AI stocks, including Broadcom, also plummeted, reinforcing fears that the AI market had reached an overheated state. The Nasdaq saw its biggest drop in months, signaling a broader market correction. This level of volatility suggests that investors are now questioning whether AI stocks can maintain their momentum. Could this be a replay of the dot-com bubble, where early excitement gave way to massive crashes? History has shown that panic-driven sell-offs often create massive opportunities for those who stay ahead of the curve. While NVIDIA's drop is alarming, it could also be an entry point for long-term investors. Market crashes create panic, but for seasoned investors, they also present golden opportunities. Throughout history, some of the biggest fortunes have been made by those who bought when fear was at its peak. The recent sell-off in AI and crypto markets is no different. While many are exiting in fear, smart money is looking for the best entry points. One of the key strategies in volatile markets is identifying assets that are fundamentally strong but temporarily undervalued. NVIDIA's massive drop, for example, doesn't mean the company has lost its dominance in AI, it just means the market is reevaluating its worth. The same goes for Bitcoin, which has repeatedly bounced back from crashes much worse than this one. If history repeats itself, we may be witnessing a short-term dip before a major recovery. Another factor to consider is liquidity. When fear dominates, weak hands sell at a loss, providing opportunities for those with patience. Bitcoin's price action in past market corrections shows that whales and institutions often use these moments to accumulate before the next leg up. This pattern has played out time and time again, yet retail investors tend to do the opposite, selling at the bottom and buying at the top. Beyond individual stocks and cryptocurrencies, macroeconomic indicators also hint at future opportunities. The Federal Reserve's policies, inflation trends, and global liquidity flows all play a role in market recoveries. Historically, when fear reaches extreme levels, markets tend to bottom out and reverse. One of the best tools to measure this fear, the VIX index, which has been a key predictor of market rebounds. By understanding these patterns, investors can position themselves ahead of the next big move. The VIX, often called a fear index, is one of the most powerful tools for understanding market sentiment. When it spikes, it signals extreme fear among investors, often preceding major market reversals. Right now, at the time of shooting, the VIX is flashing warning signs, indicating that uncertainty in AI stocks and crypto is reaching critical levels. Historically, when fear reaches extremes, markets tend to bottom out before staging a recovery. One of the strongest correlations between the VIX and Bitcoin comes from past financial crises. During the 2020 COVID crash, the VIX soared to its highest level in over a decade just before Bitcoin and stocks made a historic comeback. Similar spikes occurred in 2008 during the Great Financial Crisis and in 2018 before a massive crypto rally. The pattern is clear. When fear peaks, opportunities emerge. Right now, the VIX is climbing due to uncertainty surrounding AI valuations, tech stock sell-offs, and broader economic fears. If history repeats itself, the next phase could be a rapid recovery across multiple asset classes, including crypto. Bitcoin, in particular, has shown a tendency to surge after high VIX events, as investors look for alternative stores of value. Could this be another instance where fear is actually signaling the best time to buy? Another critical factor to watch is liquidity. When fear is high, institutions often step in to accumulate assets at a discount. If Bitcoin maintains key technical levels, it could confirm that major players are using this period of uncertainty to strengthen their positions. The next few weeks will be crucial in determining whether Bitcoin and tech stocks follow historical trends. Will the VIX once again serve as a buy signal for those who know how to read it? Understanding the fear index is key to making informed investment decisions rather than reacting emotionally to market noise. But technical indicators alone aren't enough. Investors also need a strong strategy to navigate volatility. Surviving the crypto market isn't just about picking the right assets, it's about having the right mindset. Every bull run is followed by corrections, and every correction creates new opportunities. The key is to avoid emotional decision-making and stick to a well-thought-out strategy. Right now, panic is driving many investors to sell at a loss, but history has shown that those who stay disciplined often come out ahead. One of the biggest mistakes traders make is chasing hype at the top and panic selling at the bottom. Smart investors, on the other hand, use volatility to their advantage. Instead of reacting emotionally, they analyze historical trends, technical indicators, and macroeconomic factors to make calculated moves. The goal isn't to time the exact bottom, but to accumulate strong assets when the market is fearful. Another key strategy is risk management. No matter how confident you are in an asset, putting all your capital into a single trade is a recipe for disaster. Diversification, stop losses, and position sizing help protect against extreme volatility. Right now, Bitcoin is holding key support levels and altcoins are deeply oversold, which could create opportunities for those who plan ahead. It's also crucial to differentiate between short-term noise and long-term fundamentals. While AI stocks and crypto are experiencing turbulence, the underlying trends driving these markets remain strong. Institutional adoption of Bitcoin is growing, blockchain technology is evolving, and AI continues to disrupt industries. Those who focus on the bigger picture rather than daily price swings often make the most profitable decisions. In the end, the best strategy is to stay informed, remain rational, and take advantage of opportunities that others overlook. While fear dominates the market today, it won't last forever. Those who can navigate uncertainty with a clear strategy will be the ones positioned for the next big wave. And with that, let's wrap things up and discuss the key takeaways from today's insights and what to watch next in the market. The markets are at a crossroads. Nvidia's $500 billion crash, the rise of DeepSeek AI, and the crypto sell-off are all signals that we're in the middle of a major shift. But here's the thing. History shows that fear creates opportunity. The VIX Fear Index is flashing warning signs, but for those who know how to read the market, this could be the perfect setup for the next big move. Bitcoin is holding key levels, AI stocks are readjusting, and the next few weeks will be crucial. Will we see a market-wide recovery, or is there more pain ahead? Drop a comment below with your thoughts. Are you bullish on Bitcoin, or do you think AI will dominate the next financial cycle? Let's get the discussion going. If you found this breakdown useful, smash that like button and subscribe for more deep dives into crypto. Don't forget to turn on notifications so you never miss an update. I will see you in the next video.